It's a huge problem. It is unconscionable to be running a deficit of 7% of GDP for an economy that's at full employment and is not, engaged in an overseas war. I mean, there's no excuse for that. And we know that this is part of a larger trajectory where the debt relative to GDP has gone from 30% in 2000 to 100% now, and is on a trajectory to go steadily north as far as the eye can see. And that's literally unsustainable.
So what happens if the government doesn't fix this issue? I'm delighted to welcome to the show Douglas Holtz-Eakin, currently the president of the American Action Forum, and he served as a director of the Congressional Budget Office from 2003 to 2005. We're going to get Doug's outlook for not just the economy, but also how the nation's fiscal priorities may change under a second Trump administration. We'll get his outlook for the deficit or surplus, and how the economy may be impacted by a new Department of Government Efficiency, the DOGE Commission. Welcome to the show, Doug. An honor to host you today.
Thanks for having me. Appreciate it.
Your initial thoughts on DOGE, and we'll get your outlook on the economy and the deficit. What was your first reaction when it was announced that Vivek Ramaswamy and Elon Musk is going to head this new Department of Government Efficiency, a commission that we've seen the likeness before under the Reagan administration, but it's kind of new in recent times?
Well, I confess that I was bemused as much as anything. It's great to have very prominent people heading an effort, but for the federal government, if you want to talk about cutting $2 trillion out of spending, you have to recognize that the Constitution gives the power of the purse to Congress, and it gives the implementation of that spending to the executive, and nowhere in there is the DOGE. And so the question is, what authorities does the DOGE have? On paper, they don't have anything. They are very, very accomplished, smart people outside the government. They, as I understand it, tend to stay outside the government and to make suggestions to the Office of Management and Budget. That limits the things that they can literally do. So I thought, okay, fine. I've seen the Grace Commission, the Reagan era commission. Lots of very accomplished people were in that. Went on for a number of years. Thousands of recommendations came out. As I look back, it doesn't look like it changed the size and scope of the federal bureaucracy very much. And so I think, okay, here we go again. And, I read the Wall Street Journal op-ed, and I think they're too focused on the head count. Social Security is not an expensive program because it has a lot of employees. It's an expensive program because it sends out a lot of checks. Same true for Medicare. I'm all for efficiency, and they're going to find lots of places where they could do more efficient things. I have a list of my own pet peeves, like the Department of Education's FAFSA disaster and things like that. So sure, they will make good suggestions. I hope OMB will give them to the agencies. I hope they're acted on. But there's no guarantee of either of those things. That's the problem.
We're going to come back to specifically which agencies you think should be reformed, let's say. But let's just look at the bigger picture here. This is the current update to the CBO's longer-term outlook for the budget. This is the 10-year outlook. As you can see here in this line here where it says total deficit, the average over the last 50 years has been 3.7% of GDP. That's the deficit level. In 2023, it was 6.2%. It's projected that we'll end the year at 7%, and that's expected to continue to remain steadily around 6.9% into 2034. Now, that doesn't look like a huge problem, considering that the projection itself is assuming that there's no significant change to the deficit as a percentage of GDP. But if you look at the historical average, it's still much higher than the historical average. Is this a problem for you, though, Doug?
Yes, it's a huge problem. It is unconscionable to be running a deficit of 7% of GDP for an economy that's at full employment and is not, engaged in an overseas war. I mean, there's no excuse for that. And we know that this is part of a larger trajectory where the debt relative to GDP has gone from 30% in 2000 to 100% now, and is on a trajectory to go steadily north as far as the eye can see. And that's literally unsustainable. It is at some point an enormous world capital market issue, and we face all sorts of ramifications from that. but it's also a tremendous disservice to the next generations. We are literally not paying the bill for the things we are consuming as a nation, and that deficit is part of the reflection of that. And so I think it's unwise, it's unfair, and it ought to be fixed. And it has to be fixed by dealing with the big spending programs. So, you're a financially literate person. Your viewers, I presume, following this. So bear with me for 1 second.
Yeah.
You hear a lot about taxes. You hear a lot about lots of things. In the end, this is all about so-called mandatory spending, which are the entitlement programs. Over the next 10 years, CBO projects will spend about $85 billion total. Of that, only 21 are going to be annual decisions of Congress, the annual appropriations. And then you're going to have something like 14 or 15, which are going to be interest costs. The rest are entitlements or mandatory spending. And two programs, Social Security and Medicare, will be more than 50% of all non-interest spending all by themselves. They are the money. And so you got to get at the $36 trillion that is Social Security and Medicare. They're bigger than everything else. And then here's the problem. They grow faster than everything else. Social Security grows at 5.5% a year, Medicare at 7%. If the economy grows at 2% and we have inflation back to 2%, revenues will grow at 4%. So we have very big programs that grow faster than revenues can plausibly grow. So it continues to diverge. And until you get it to converge, you can't solve the problem. So we have to get those programs to grow more slowly. That's it. That's the only budget challenge we have. If DOGE can do that, God bless them.
Before we continue, I want to tell you about a recent data breach that exposed nearly 3 billion records in one of the biggest data breaches ever. This case highlights just how vulnerable personal information can be in today's digital world and the importance of protecting your privacy online. That's where Delete Me, today's sponsor, comes in. Delete Me removes personal information like your address, phone number, and more from hundreds of data broker websites. It's a service I trust because it makes staying safe online simple and effective. Using Delete Me is easy. Submit your information, and within 7 days, you'll receive a detailed privacy report showing where your data was found and removed. Plus, Delete Me keeps monitoring and removing your data all year long for ongoing protection. Head over to the link in the description down below and use the promo code DavidLynn at checkout, or simply scan the QR code here on the screen to get 20% off on all U.S. plans today. Thousands are already relying on Delete Me to safeguard their online privacy, so start protecting your personal data and information now. Grow more slowly. What do you mean by that? So suppose you... Yeah, okay, so I know it's not the responsibility of the CBO to implement legislation. You make recommendations, but suppose you were to testify in Congress today.
CBO is by statute barred from making recommendations. They did not. The CBO told them how to do their jobs. You answer questions. If we do X, what happens? Y. That's it. But we know, like, Social Security is growth in number of beneficiaries. That's demography. It's baked in the cake. So you have to change the benefit structure, and that means, I think, more affluent individuals have to get less back in their Social Security. I have no particular problem with more aggressively mean testing Social Security. You can get it done. Medicare is harder. You have beneficiaries, and then you have healthcare costs on top of that. We have struggled mightily in this country to control healthcare cost growth. We've made some real progress, but that's the next big challenge.
If Congress were to ask you, what they should do to bring this number down a little bit, how would you answer that question?
I would say you should do Social Security reform tomorrow. The Social Security program has built into it a trust fund. When the trust fund exhausts, it is by law not permitted to pay full benefits. So within 10 years, Social Security can't pay full benefits. It has to have a 21% across the board cut. Mm-hmm. You and I both know Congress will never let that happen. That's unconscionable. But that means that if you're 55 right now and you're thinking, I'll retire in 10 years, you don't know what your Social Security is going to be. Congress is going to have to make a change somewhere in the next 10 years. You don't know what it is. That's a terrible way to run a pension program. People can't plan for their retirement. So they should fix it now. They can take out some of the red ink. It's responsible for $3 trillion worth of deficits over the next 10 years. And they can let people plan their futures. That'd be a really good thing to do. Number one thing on my list.
Yes. Trump actually said on one of his Agenda 47 videos that he doesn't want to make any cuts to Medicare.
Yeah, I'm aware.
Yeah. So, So that plan is unfortunately not going to happen. How do we boost the revenue side, Doug? Let's forget the outlays for a minute. If Congress were to say, let's focus on boosting this, what should we do?
You can boost revenues. I'll just repeat, you can't tax your way out of this. You're going to have to deal with the spending side eventually. Because if you boost revenues and then they go back to growing at 4%, you begin to diverge again. So you have to deal with the spending side. But we can do a couple of things. Number one, in Social Security, the payroll tax used to apply to about 90% of wages. It now applies to something a little under 80. Boost it back up to 90, broaden the base, raise more revenue. More generally, when they go to do the replacement for the 2017 law, think of it as a tax reform opportunity. Broaden the base every place you can, and then raise rates as necessary to raise more revenue. I think that would be a good thing to do. The 17 law was very successful in that regard. People don't fully appreciate how much base broadening went on, and I think more of that would be the way to get more money.
Well, Doug, tell us about the tax cuts that we could expect in Trump's second term. How will that impact the revenues and outlays that we see here?
So if they just extend the 2017 law, right, that's the part that's going to sunset at the end of next year, they're not really cutting taxes. They're just continuing current policy. Okay. And so if they simply said, okay, we'll do another 10 years of this, then we just continue with the current deficit, 7% of GDP, and the current tax levels for you and I. No one would feel a tax cut. On top of that, he did make a lot of promises on the campaign trail. He said no tax on tips, said no tax on overtime, no tax on Social Security, said no tax for people living overseas. Go through the list, cut the corporate rate to 15%, deduct your auto loans, don't cap your state and local property tax deduction as much. All of those things would be additional revenue losses. They're all going the other direction than what you had suggested. And I think the open question is how much of that will Congress realistically take up next year?
Right. So the other point that I like to make is that the debt level has been rising in nominal terms, currently surpassing $36 trillion. This is the CBO's projection here. If you can see gross federal debt, it's projected to increase substantially into beyond $56 trillion in the next couple of years into 2034. How sustainable is this trend?
It's not.
Well, can GDP grow to the extent that it can catch up to this, and the relative level of debt to GDP will remain manageable, let's say?
No. We have a serious federal budget problem. You can't tax your way out of it. You can't grow your way out of it. In the end, you have to decide to control the spending as well as have pro-growth reforms that, raise more revenue. I'm all for that. But there are no painless bullets here. Like everyone wants to have a painless solution. We'll grow our way out of it. Those just are not numerically plausible. Again, if you have Medicare growing at 7 and you currently have the growth rate at 4 in nominal terms, we're not going to get an additional 3 percentage points of nominal growth for 10 sustained years. That's just not numerically plausible. So we have to look for.
Why not? Why not, Doug? I mean, that is Scott Bessent's policy, the second 3 in his 3-3-3.
He wants to get the deficit to 3% of GDP. There's no way he's going to get GDP growth to 7%.
Okay.
Not going to happen.
He wants GDP growth at 3%. Will that be sufficient? Just 3% GDP growth, forget 7. 3% GDP growth, is that sufficient to over the next 10 years help with this problem?
So again, Social Security's growing at 5.5. Nominal GDP is at about 4. If you boost it by a full percentage point, you got it to 5. You're still haven't closed the gap on Social Security, and the other ones are bigger.
So what happens if the government doesn't fix this issue?
Crowds out private investing. You're going out and borrowing $2 trillion plus every year that will not be available to individual citizens to go to college, to train themselves, for businesses to acquire other businesses, invest in the ones they have, put in a new software system, all of the things that are routes to higher labor productivity and thus higher real wages. And so the standard of living will stagnate. And that that is the way that we will shortchange the future. They will not get a standard of living that they would otherwise get if we put our fiscal house in order. And that's the most important thing. You'll hear a lot about sovereign debt crises, sort of loss of reserve currency status, all of those things. I think they're farther down the road. They aren't imminent. But there's no reason to mess with them. Like, there's no reason to ask the question, how long before the world loses its patience with the U.S.? Let's not run the experiment. We have good reasons to fix this on the merits. Let's go do them.
Yeah. At what point would we put a debt default, a sovereign debt default, on the table as a probability above 1%, let's say?
I think, when they downgraded the U.S. most recently, Fitch pointed not to the inability of the U.S. economy to support the debt load, but the inability of the politics to deliver on managing the debt load. And so we are being graded on our financial management, and we've been found lacking. I think that's the imminent threat, getting past the sort of gamesmanship and brinksmanship that comes with debt ceiling increases. We got another one coming in January. Got to put that aside and then get to managing the debt by dealing with the underlying programs. Those are the steps.
Okay, what happens to long-term interest rates once the deficit and debt levels continue to rise?
They go up, and I think what you've seen is markets beginning to take that notion seriously. The Fed cut in September. We haven't seen long rates come down at all. We've seen mortgage rates back up, and people are noticing. And if they in fact do both extend the tax cuts and do another, his promises add up to another 3 or 4 trillion. I think you'll see a revolt. I don't think the bond market's going to like that a bit.
When you say revolt for the bond markets, what does that look like?
Spike in the 10-year, higher rates.
That in itself could kind of equate to quantitative tightening, could it not?
Oh yeah, I mean that's a serious signal that you have to choke off the growth in demand because you're threatening a lot of inflation, and so the bond market for you. Actually,
a reporter did ask Powell at the last FOMC conference last month whether or not a rise in the 10-year could be on the radar and something they're looking at. He said they are looking at it. At what point do you think they're gonna maybe stall rate cuts because the 10-year is just rising?
At least to my eye, they've gotten iffy on the cut at the December meeting. Like there are very few people out saying yes, 25 basis points locked in. You've got some people who are saying, Ralph, I'm blanking on his name, down at the Atlanta Fed said, look, yeah, the long-term trajectory is down, but who knows at the pace and when we'll do the next one. Bostic's a pretty dovish guy usually, and so even those folks are backing off a guaranteed 25 basis point cut. They want to see what's going to happen to inflation and to long rates before they go any more rapidly.
Okay. Could you comment on Trump's trade policies, tariffs with not just China, but just last week, President-elect Trump announced higher tariffs on Mexico and Canada. Will that make a significant impact either way on the budget deficit as it currently stands?
So the most dramatic proposal was a 10% across the board universal tariff. That would be a $3 trillion tax increase at its stated value. To give folks a sense of how big that is, that's comparable to the famous Smoot-Hawley tariffs of Great Depression fame. So that's a serious proposal. It's a tax. I know they like to play semantic games, but it's a tax on imports. So it's a partial sales tax. Viewed from a tax perspective, $3 trillion doesn't solve our deficit problems. That's a drop in the bucket. Mm-hmm. It's highly distortionary. You don't want to tax things where you can quickly substitute one thing for another, and that's exactly the margin on which they're taxing. And it's very regressive. Sales taxes are very regressive. So it's not an attractive tax proposal in any way. And so I don't find it easy to defend. And, you can't replace the income tax as a revenue source. Tariffs will never do that.
When you say that it's a more substantial tariff policy, is it more substantial than the last one that Trump implemented in 2017 term?
Yeah, way bigger. There's no question. And there are some things to think about, right? So far, we have a lot of talk.
Yeah.
Nothing's actually happened. How do you implement that tariff? Like, what authorities will he use to implement it? That's far from obvious. He's announced 100% tariff on BRICS if they continue the development of an alternative to the dollar in international financial transactions. Under what authority can he do that? I don't know. I don't see one that he has that he can readily just do that. Canada and Mexico, same thing. Does he have a finding that they're national security threats? That's hard to buy. There are North American partners in a trade agreement. So one way to look at that 25% tariff is it's just the opening bid on renegotiating the trade agreement, the USMCA, which was going to happen next year anyway. So again, it's early. A lot of this, I think, is positioning and strategy and not real. We'll see what he actually does and how he does it.
Some economists have argued that the double whammy of rising deficits and, of course, tariffs on the horizon spell inflationary pressures. So could we see a second wave of inflation?
All eyes should be on the Fed. And the Fed certainly can't be happy about being potentially put in this position. So suppose he does a 10% tariff, just for simplicity, somehow done across the board. You're the Fed. What do? Do you say, okay, that's a one-time increase in prices. We get that. We'll let it happen. We'll accommodate the increase in the price level. And then we'll go back to our 2% targeting. That'll be fine. And so it's fine unless people misinterpret it as the Fed gives up on inflation, because they're going to see prices going up and the Fed going, no big deal, which is terrible for the Fed, whose credibility is at stake and who've tried to recover from their COVID era mistakes. So maybe they push against the price level increase. Well, that's in real world. Just we raise rates, we go back to quantitative tightening, we tighten financial conditions, and you get a recession. So what is the Fed going to do? That'll tell how much inflation you get, but they're not going to have any good choices.
What is your view on modern monetary theory, MMT? The notion that we can just print our way out of the problem. Inflation is not a result of the increase in the money supply, is one of the tenets of the theory. And in theory, we could just solve our deficit problem by creating more money supply.
I don't think it's right. I mean, there's got to be a set of circumstances in which you sort of increase monetary policy's stimulative effects and don't get any impact on the price level. That just means there must be massive excess supply. So we had an MMT moment. And it was in the second quarter of 2020 when COVID put 20 million people out of work. And since then, it hasn't been true. The proponents always say, well, if we start to get inflation, we'll do some clever fiscal thing. We'll raise taxes or cut spending to offset that. We don't have to worry about this money thing. But you and I have watched Congress in action, and they're not going to do some nimble fiscal thing on the timescale necessary to offset a monetary policy mistake. So I think the MMT camp has seen its day. It's over. That's not the real world, and we need to deal with the real world monetary policy issues we have.
Okay, so Doug, let me take a look at this clip here from Milton Friedman commenting on which government agencies he would have liked to cut. This goes back to the Department of Government Efficiency. Elon Musk actually tweeted this. Take a look, and I just want to get your reaction here.
14 is a lot for television, so I want to just go right down the list quickly and have you give me a thumbs up or thumbs down. Keep them or abolish them. Department of Agriculture.
Abolish.
Gone. Department of Commerce.
Abolish.
Gone. Department of Defense.
Keep.
Keep it. Department of Education.
Abolish.
Gone. Energy.
Abolish.
How?
Except that energy ties in with the military.
Well, then we shove it under defense.
That's
the little
right.
bit that handles the nuclear,
Right, that ought to go under
plutonium
defense.
and so forth goes under defense, but we abolish the rest of it. Health and Human Services.
There is room for some public health activities to prevent contagion, such a thing as, for example.
So you'd keep the National Institutes of Health, say, and the Center for Disease Control down
not
in
the
Atlanta?
National Institute.
Oh, no?
Those are mostly research agencies. No, that's a question of whether the government should be involved in financing research.
And the answer is no.
Well, that's a very complicated issue, and it's.
I'll leave the rest for your interpretation. Do you agree so far? Yeah. Do you agree so far? And if not, how would you make agencies, I guess, either more efficient or less redundant?
So these are two different things. One is, what is the appropriate scope of government? And what you heard Mr. Friedman saying was, hi, I'm a traditional conservative. Markets work. Where there is market failure, public interest, we have government agencies. That's the Defense Department, but protect us all uniformly. Where there's externalities like a contagion, we have a place for research. There's often spillovers from research. You might have the case for that. But in places where there's no externalities, no public goods, there's no reason to have the government doing things. That's what you heard. And that's a way to sort of have a demarcation of where the government starts and stops and what it does. Efficiency is how good is it at executing the things it's doing. And so right now we're having a conversation that mixes those two. I mean, we have what's going to be the scope of the government. I think it's too big. I could lose all the ones on his list, that's for sure. But also, what's the efficiency with which they operate? And we have some real inefficiencies. I think, the Department of Education has had two phenomenal inefficiencies in recent years. The ongoing conduct of the student loan program, put aside the forgiveness, is a disaster. This is the largest lender on the planet now, and they are not a financially nimble agency. That's not what they were set up to do. There should be someone else who does financial management for a living, running that loan portfolio. And then this, college aid application, the FAFSA, which they had 3 years to prepare and they couldn't get to roll out properly. It's just an enormous disaster. Those are things that I think DOGE ought to be just focused right on with the laser beam. And here's the thing. They don't have any authority to do anything. I've emphasized that. But they can publicize things. And they can say, this is appalling. This would never happen on my watch. And they can force agencies to act as a result. And this is the true story from the Grace Commission. Agencies know where they're failing, and they know where Congress is forcing them to do things they don't need to do and shouldn't do. And they can tell DOGE, hey, you should recommend that we dump this program. And then DOGE can say, you have to dump that program. And they can act like they're very upset and dump it. A lot of that went on with the Grace Commission. That's very beneficial.
When we say make it more efficient, this is the counter argument I've heard from some economists, that an efficient government is an oxymoron. We can't do that. And so why not just privatize some of these agencies?
So there are some things so again, the government provides things, but it doesn't necessarily have to produce them, right? The Defense Department doesn't produce anything. It buys its materials, it buys its weapon systems from producers in the private sector who have every reason to be as efficient as possible in the production of those things so they can make some money. So you want to keep everything out of the government from a production point of view wherever possible. And then efficiency in the government is efficiency in the targeting of funds, efficiency in the execution of contracts. And there are things there where the government's never going to be very efficient because we make it inefficient. So if you think about almost every government contract, there's a set aside for veterans. There's a set aside for small businesses. There's a set aside for female-headed companies, name it. Those are things that any business can say, well, we can find one guy who can do this whole contract. It'll be cheaper. And Congress is like, well, we don't want that. We want to do this as well. And so it has more than one objective.
Okay, so Vivek wants to cut the Department of the size of the government by 75%. That's what he said on the Tucker Carlson show. There's millions.
Just to interrupt, and I apologize.
Yes. What's
the size of government? Is it the number of employees? Is it the amount of spending? Is it the lines of regulatory red tape? That's a great line. I'd love to cut the size of government by 75%. But what is it you're going to do?
I think in this particular case, he was referring to headcount. And now if we look at the number of government jobs in the government, it's in the millions. I believe there's something like 11 million government workers in the federal government across the board. We're just adding to the unemployment rate, are we not?
If we cut them?
Yeah.
Oh, I have zero concern that the U.S. economy can absorb additional workers in the private sector. I mean, we've gone from a glorified hockey team in 1776 to the largest, most powerful economy on the planet, and in the process moved everyone out of agriculture and into services. And the flexibility with which private markets can take advantage of the opportunity to use skilled workers. Not a problem.
Okay. Actually, I misspoke. It's 23 million people at all levels of the government. But anyway, if we cut a substantial portion of that, maybe they'll be absorbed by the private government. A private sector is what you're saying. How do you feel about Trump's immigration policies and what changes you can expect to the labor supply once deportation starts to happen, if indeed it does happen?
So there's no reason to favor illegal immigration. So I endorse the border security measures. Deporting people who are here illegally strikes me as current law. That's what we do. It's just fully implementing current law. The magnitude of this is substantial. When he first ran in 2015, my think tank priced all this out. He said he was going to deport every illegal immigrant. And at that time, it'll be much more expensive now, cost 400 to 600 billion federal tax dollars for the people and the courts and the facilities to hold people, and then planes, trains, and automobiles to get them back to their country of origin. It's a very expensive proposition. We lost at that point 6% of the labor force. That's a big economic consequence. Fewer people to make output. And it took about 20 years. So the Blythe promise that we will do it again in a year, I can't sort of get my head around at face value. What will he actually do? We'll see. I think the bigger concern is on the other side of the ledger, which is new immigration into the U.S. It has been true for a long time that the native-born population has sub-replacement fertility. Fancy way to say that we don't have enough babies to even maintain a current population size. So in the absence of immigration, we're Japan. We just get old and small and less vital. And the flip side to that is by making good immigration choices, we dictate the future pace of growth of the labor force, the skills that are in that labor force, the growth rate of the economy. And I think we should be aggressively using immigration as a tool of economic policy. And so I'm going the other direction from where his current position is.
And keep in mind that with an aging population and a fertility rate below 2, that means more stress on Social Security and Medicare down the line.
Absolutely.
So, we've got fewer people relative to the overall population in the working age population, more elderly. So how is that gap going to be financed, basically, is my question.
Yeah. Right now, the plan is, right now there's no plan. If we don't change the number of workers, then we have to either raise taxes on them dramatically or cut the benefits given to the elderly, or both. And that's the arithmetic of Social Security. It's a very simple program. It's money in and money out. Okay.
Could the private sector to kick in and take some of this burden?
That's what the private sector has, all the burden. We pay all the taxes. Workers and employers are each on paper paying half. The workers are ultimately picking up probably the full burden. That there is the government doesn't have any resources. It is all financed by the private sector in one form or another.
All right. Well, finally, let's close off on the work that you're currently doing at the American Action Forum. Tell us about some of the key policies and issues, economic issues that you're examining and researching. Perhaps we've talked about them already, perhaps not.
So the inspiration for the American Action Forum was my work at 2 White Houses. I worked for both Bushes at the Council of Economic Advisors. I ran the Congressional Budget Office. I was the policy director for the John McCain presidential campaign. And in those jobs, you did policy research, policy education, policy options, policy advice, but you did it in a very special way, which was you worked on whatever was happening that day. You conveyed your findings in English to non-specialists, and you tried to make good policy, good politics. You had to understand the political lay of the land. And it occurred to me when I left the McCain campaign and I was unemployed, that there was a demand for that outside of my government superiors. People aren't going to sit around reading white papers. Something will happen, an oil rig blows up in the Gulf or something. They're going to say, wait, what are my options here? What should I know about this? And I'm a small government conservative. Where's the market solution to this? And so that's what the American Action Forum is intended to be. It's a permanent advocate for market-oriented solutions to whatever's going on in the world. And so we're working now on the things we know are going to go on in the world come January 1. The debt ceiling is going to come back in full force on January 2nd. Treasury is immediately going to be into extraordinary measures. Will the Congress be able to get us through this without impairing our credit rating, which they failed to do the last time around? They're about to kick funding the government to March and not fully funded. So we'll be doing appropriations in March for fiscal year 2025. We're looking at the appropriations process. What are the options there? As you know, there's big bill next year on the tax side. What is the right way to think about tax reform 2025, where I think we should have a deficit neutral tax reform that features a broader base and a pro-growth framework, but doesn't increase the deficit. We can't afford to be doing that. We have to go the other direction. So what are things that would do that? So we're working on that. Those are the things we work on. We have healthcare, technology issues, You name it, the gamut of domestic and economic policy issues. We've got someone working on them.
Well, let me just end on this note here. Here we have the federal deficit as a timeline. You can see it going all the way back to the 1930s, actually. And we are actually at the widest point since basically World War II.
Yep.
And in the late 90s, there was a period of time when the deficit was the budget was balanced, and we had actually a surplus. That happened over the course of the 90s into the late 90s. If we were to design a system whereby we go from negative 6.1% of GDP to zero in the matter of 4 years without causing a recession or shrinking the economy, is that theoretically possible, you think?
Yeah, I think we can probably not get the deficit to zero in 4 years, but we can put it on a trajectory to zero within 10. And that's really changes now that'll be implemented over the course of time in the big entitlement programs, plus our revenue. I mean, we're going to need more revenue. I mean, there's no way around that. People don't like that idea. I don't love that idea, but that's reality. So we got to do both. We got to raise the revenue in a smart way that doesn't impair growth. We got to deal with the spending programs so that we're targeting them on people who have genuine needs, and we're not betraying our obligations to deliver a better future to the next generation. That's the challenge of the moment.
Okay. Thank you very much. Where can we learn more from you and the American Action Forum?
Just go to our website, americanactionforum.org.
All right, we'll put the link down below in the description so people can check it out. Thank you very much, Doug. I appreciate you coming on.
Thank you. Pleasure. Thanks for having me.
And thank you for watching. Don't forget to like and subscribe.